Hey everyone, thank you so much for joining Archangel Alts. And I'm doing this video just to kind of share with you a little bit of history with what we've been doing. You know, who are we? Where do we come from? A little bit about our journey. So that's what I'm here to share. I'm going to set this up for watching some interesting things in the background. Actually, most logical thing to do, right, would be to load up the BTC. USDT sitting at 38.30. It's very healthy. It's exactly where it was before the drop happened, if I remember correctly. 38.30. Show me the marker. Show me the money. Well, no, I went too far, didn't it? There it is, 38.38. And now we're coming back up to 38.30. All right, so Archangel Alts. About 15 months ago now, we're looking obviously at the 19K Bitcoin thing. Haven't known about Bitcoin for a long time, but going back to 2011, 2012, doing deep, extensive research on global economies and emerging new age economy, just studying a lot of the different trends and movements coming into play. And that kind of formed a basis for, watching Bitcoin finally kind of coming into its own. Finding it just a really interesting thing. So, started to study positions, studied the highs and lows, and looked at things on the different exchanges, joined several and tested them out with $20, $30 here and there. Mostly to learn that if you're moving very small amounts of money around, then you can do just enough in fees to where you don't have enough to do a trade. But, it became very clear, even though Binance was only, maybe 2 months into starting up their whole thing, that they had something better than most of the competition. And of course, they also have very reasonable set maker-taker fees. So basically, if you buy and sell out of a position, it's about 0.2 of whatever the size of that trade would be. And then on top of that, they had a 50% off for the first year. So we only had to make something on top of 0.1%. And, looking at the movement that different coins made, I noticed that the higher the percentage, the faster the trade. So, meaning that there isn't really usually anything reliable and safe that happens, in a 7-10% range. If you're looking for profits going up 7 to 10%. If something goes, 5, 10, 20, 30, 100, 200%, it's usually being pumped and then it very shortly comes crashing down. So it's very easy to get stuck in a position. So we studied all these things and we started testing them out. I did paper trading where nothing was at risk, but I wanted to see if I was doing well. And I was. So I decided to put a little bit in and test, and we kept, earning, successfully trading. And so we put a little bit more money in, now we're in like $100, $200 and kept trading. And I was not only still doing well, but, clearing positions at a profit. And testing them to make sure we understood the fee structure and learning to do everything in decimals this way for the first time. And not only were we succeeding, but we were doing more daily trades. So as we're earning and doing more trades, we're saying, hey, if you get to X%, then we might actually, get to where it's like, reaching 10% profits. And that's from what I understand, that's a really short time to be hitting that range. So let's keep going. And week after week, we just found that seemed to have a fairly unique skill in trading. And even though I didn't understand everything there was to know from the indicators and stuff, I was testing what I learned from other people on YouTube and Ameritrade, doing the sandbox trading, and just watching and learning and watching and learning. And one of the things that occurred to me early on was that, first of all, it's very substantial. There's something available 24/7 that's like the stock market, but so many different things, and because it's unregulated, there were potential outcomes that were not available to people like you and I from doing traditional stock trading. If there's as low as a $5 trading fee and you only want to try to get 1% from a $100 trade, you're going to be down even though you're up. So that's just one thing. But also there's blackout periods where the volume drops so much after closing time on the market. All these different things that I just saw as a huge benefit to the coins, plus the fact that once you're into the coin environment, you don't really necessarily have to touch anything that is set to the standard of fiat. So even though there's a huge fluctuation, if you have an instinct for understanding how to navigate that fluctuation, the only times that you really might get stuck, unless you're just having a down day, is if there's a massive shift that nobody could anticipate. Now, people will always come in after the effect and say, look at what I know about this or that. I have yet to see anybody that is consistently, convincingly predicting every single one of these cliffs as they come along. My instinct has been telling me these are the things to watch for, and other people do similar stuff, but I'm never going to come in and say, I know that this is what's going to happen for certain, or it's going to go down, it's going to stay the same, it's going to go up. That way you're covered. But anyway, so, we noticed that there were these things that were unique about the coin market that were beneficial, and it was after our first 1,170 trades that we took our first loss. And that loss was actually breaking even. We decided to zero out. So technically we paid the trading fee to take a loss. It was very, very small. And, technically it was just our first break even. So, over time, we would develop, okay, what do you do when you get stuck in a position or you're holding? And we took a look and, found that over time we had chosen positions well enough that even when something held, it wasn't long until it cleared too. So the challenge with that, and I'm going to try to use Bitcoin as the example. It might look a little more extreme than some other things, but probably not too much. So I'll show you what we found. Yeah, it's not the best example, but overall, you can see what's happened. There's the 19,000. Glorious day, glorious day. So this loss from 19 down to almost half became a 60% drop in the altcoins. And so did it recover? No. From there, it came up a little bit and then it went down again. And so, this progression has caused overall, it dropped 60%, recovered a little bit, it dropped 50%, recovered a little bit, it dropped 60%, and recovered a little bit. And that last one is what happened as of the Bitcoin Bitcoin Cash hard fork that happened right. I'm just kind of going in blind. I didn't even look at the date. But yes, this is where it happened in the 11-14 range. So we have not come back from that. People that are saying, this is just part of the natural correction. You can look here and you can look here. No. This was absolutely not part of the natural correction going on. In fact, the timing of that pattern, you can see that things were leveling out for the first time. And isn't it interesting how much of a drop in volume happened before that? It's almost like people from the inside knew what was going on, because there's nothing like that before. So, you never have 3 weeks in a row of that low volume and then a third of that volume there. So anyway, just using this as an example to show you from here to here, 3, 6, 9, 12. It's, quite low in comparison. And it has to come up, coming up from this position is a much harder pull than it is for things to come down. So anyway, the reason that I mention that is because we're learning how to clear positions that are holding when, as you can imagine, if you were trying to clear something right here and it did boom and you're done, then you're fine. If you tried to clear something here, you'd be fine. If you tried to clear something here, you'd be fine. But if you were here and it didn't clear immediately and you're waiting this out and then it doesn't come back up to it again, if you're using a stop loss, that's fine, but you don't want to have a stop loss that's like 15, 16 times what you'd have to make up in a position. So, like if you had a 7% stop loss, but you're only trying to make 0.5% on a position, it's a huge risk. So, we tried to learn how to assess things early on. I believe the most positions, when we were literally dealing just in our first $1,000 or so, we had 41 positions that we were holding, and 17 of those were Ethereum over time. And so here we were watching Ethereum. Let me see if I've got it set up to where you can see Ethereum. I know I'm terrible. I don't have Ethereum in my favorites list. I very rarely trade Ethereum, only if I really see that it is trending the way that I know it's going to. Not that I mind, I like Ethereum. I'm not necessarily crazy about it for trading. For holding over value, if that's what you're looking for, that's fine. So, you might see something like this and it moves, just shy of what it takes for it to be the value that you're looking at to get out of a position. Right now, it's doing fantastic. 11,000 Bitcoin 24-hour volume. That's great. But we were still talking about how it's not really strong until it hits 0.038. So let's see where that would be for Ethereum. Ethereum. Okay, so that's not even right there. And you can see we did a little bit there. So, it's averaging where it should be. But the point is that, what we learned with Ethereum and trading through that, we're thinking, oh, well, if you trade with Ethereum, then the worst thing that happens is you're either in Bitcoin or Ethereum, and that doesn't seem too bad, But if your trades are getting stuck and it's taking all this time to try to get to a clear position, we finally, we watched over days and days. It's up another 1/3%. It's up another 0.5%. It's up another 1%. We're getting closer. We're getting closer. That was the longest that we waited on our holds. And we finally cleared all 17 Ethereum, and we were down to, having I think we could go about 4 days of just really heavy trading with very small percentages before we'd have a single position that would get stuck, and that one might take 3 or 4 days, and it would clear. At the worst 3 or 4 weeks, and then it would clear. So, designing everything around this, we're saying, gosh, if we actually can maintain this while, say it again, while, the whole market is essentially doing this. One of these days I'm going to use the perfect example. There we go. We're learning how to even clear the positions that are holding while everything's going down, and that just seemed kind of remarkable to us. So, as we increased, what we'd put in for our trades, we developed a system based on exponential growth because we were experiencing exponential growth. And so we decided that, the idea of investing long term, you leave your money alone and it'll grow on top of itself. Compounding. But when people talk about swing trading or day trading, they're just trying to pay themselves that as a job, and maybe their insurance and that kind of stuff. But they leave very little of their own earnings to save over time. And the whole idea is if I can turn this very large pot of money around over and over and over again, I'm just going to do 3 or 4 maybe big trades a week. I study, look at the morning stuff, try to get into a position. If it's not right, I'll cancel it out. Just study the fundamental analysis, technical analysis, all these different things. And eventually, throughout the week, you've made enough trades to where you're paying for your expenses that week, and you're earning something better than if you went to get a job doing the same thing for somebody else. So that makes total sense, except for you're always going to have to do that work, and it's really, really grinding, tough, challenging work, and it puts you through this emotional stress that most people don't necessarily experience, except for in divorce or death or buying and selling a home. It's daily crushing stress. So why do that if you're only going to do that to pay for yourself and never get to a point where you don't have to do it anymore? Or if you enjoy it that much, then it just seems like you should be working on a plan that works similar to investing over a long period of time. Instead of waiting 10, 15, 30 years, we have this opportunity of a lifetime to treat it like an investment, but to earn, and not touch it until it grows to a certain point. So we doubled our original value. We doubled it again. And, our only, I would call, it's not really a mistake, but the only really unfortunate thing is that, while the market is doing this and we're earning and we're still earning and we're only getting stuck in holds every once in a while and we're earning, we really should have scaled it up much earlier in the game, because it takes, I have yet to learn how to shorten the exponential growth process more than to where you have 5 months of growth that really pays off in the sixth month. That model really should not be anything less than 3 or 4 years. It really shouldn't. But the thing is that once you get into the exponential part, if you do it for that long, you're talking about, hundreds of millions of dollars, even if you started at $1,000 a trade. So, we try to say, okay, how can we hack into the front end of this now that we've tested? Because, the part of the market here, I would say from maybe July into August, this was one of the most challenging times. And we really ramped it up in here and we did incredibly well. But it's still just, we should have had momentum back here, March and April, to just say, step it up right now. So this, for many people, looked like it was going to be, the time that, here comes the bull run. And you can see some things had a little bit more of it than others. Really thinking, is this it? Is this it? Is October going to be the bull run? And then, inevitably what happened in the middle of the hard fork, 11-14, 11-13, 14-15-ish, everything just got slammed in here. Now, DLT, very, very impressive recent growth. That's a much more steep bounce back. So I do think that these first signs are like tremors before a bull run. I do not think that this is the bull run. I don't see nearly enough volume for that to happen. And whenever it does begin to happen, my hope is that people's newfound interest is going to come from the ICOs that are serious about sticking in there for the long term. But I don't want to get too far off that. But, this is just the thinking as we go along. So who are we? Where are we? When we started to see the hard fork and just people in different forums saying, I give up, or I lost everything, or, this stupid coin, what do I do? We felt more and more of a need to say, listen, we're learning how to succeed even though stuff is happening the way it is. We should really, do this idea we've been talking about and launch our channel and, first of all, share our trades, show what we're doing. We're being completely transparent. We'll go right here, without any thought and go straight to trade history and set it up. Let's look at 3 months. Maybe the terrible stuff happened so long ago they don't want us to see it. So let's see what's happening. Well, sell. Bought and sold Phoenix, Vibe, DLT. You don't see a whole list of green not followed by sells. There's our OAX. We sold, bought and sold Steam. When I tell you that it's been a lot of different positions and we bought and sold them, we're not hiding anything. So, go entirely through that whole run. I'll shorten it so it doesn't take a long time to load. Are only things that, this is from, 15 months worth of buying and selling, and that's it. And you can see that what I've done is I've stretched out, 5.2, 5.3, 5.4, 5.6, 5.7. If it comes back around, very shortly, that's about 100. About 50 up that it needs to go. So when it comes closer and closer to that, there's a very good chance that we'll, cancel out 2, 3, 4, and 6 and sell them all at 7, because we got time to watch it, unless it happens for the hour that I'm sleeping. So, that's the thing, is that absolute transparency. We're here to, of course, learn from our own mistakes and, be a good example. Our trading philosophy is to say no to greed and yes to wisdom. And we've been doing this for a while. I think that we are nearing, if we haven't already crossed our 20,000th trade, buying and selling, breaking them up into a few positions. So even if every single one of them represented 3 or 4 different positions, all clearing kind of within a little cluster, you're still talking about like 5,000 or 6,000 trades, and we're holding 12 coins worth of those trades. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe 11. Oh my goodness, So it's not something that there's really an example of. So it's very tough, and it's never been tougher than it is right now. And if things are starting to spike and go up the hill, that doesn't make it easier, because we know how low this stuff can get. We know how low you can go. So it's very, very, very risky. Trying to trade, let's say that people think that, oh yeah, here's where TNT is going to turn around. Well, I mean, it's always followed by something and you don't know when that's going to be. And all of the indicators in the world can only point you in the direction of what's happened in the past. Well, what's happened in the past? 100% up, 100% down, somewhere in the middle. So that's a little bit about who we are, where we're coming from. Our goal is to help others to accomplish the same goals we're trying to accomplish. We're going to be showing you just kind of what I think is just brilliant about the way that the technology and the exponential growth all work together. And I do believe that it's possible. I do think it's one of the toughest things that you and I will ever try to accomplish together. But that is what I believe in, is our trying to accomplish this together. So we hope that you will join Archangel Alts and be a part of the process, be a part of the solution to the process. We're going to be teaching you the how to manage a growth cycle, how to manage your own process, develop the system around what you have to trade with. I'll teach you the rule of fifths, which deals with your size of positions and how to scale up and down based on where you are. And the principle of thirds, where it covers a lot of different things involved in the trades, but patterns in the reoccurrence of patterns, and how to manage where you are in your position. There's so many different things involved in the principle of thirds, but it's noticing everything from fractals to things that happen in threes, and which third of the position to test things before going in. Lots and lots of different things within those two main concepts alone. You'll have an edge over other people that are trying to make their way through this market. We're going to talk about the philosophy and the economics behind Bitcoin and what's happening in the coin market, the entirety. Why trading is good for the future of the coins, and why we want to see mass adoption come from the exchanges. Better off something centralized like Binance than the decentralized trade exchanges, where you do not have anything other than your own common sense to protect you and your privacy. So there's something very safe about a good exchange like this. Very rarely are there situations when there are. Usually it's because something that, somebody opened up, clicked a link in their email that they shouldn't have, or they're in a group and they believe somebody was sending them coin when they actually were, the people that are not quite used to knowing how to protect their private keys, et cetera, et cetera. So very, very, very few times are there anything that is a breach that happened because of something compromised on an exchange. Binance has been really pretty amazing. And CZ, the head, is just very transparent. I really like, when he talks, he doesn't have to think it through a million times first before putting something out there. He just seems like an honest guy. I'll be disappointed if he makes dumb decisions. So hopefully he won't, because he seems really smart and just very with it. So anyway, that's a little about us and what we're going to do. We're going to do live trading. We're going to do all these things in the news and philosophy and teaching new skills for free. But the paid group, it's going to be a deeper dive into all of those different things, teaching you more about the charts and indicators, more about not just what we're thinking of doing, but why we're thinking of doing it, so that you can carry that into your own positions. We might be with you for a couple hours, even every day, but, there's, 15, 16, 17 other hours that we wouldn't be there for you. So you can ask us questions anytime, in the private groups, everything gets priority. And we're working to try to get like our first, 30, 40, 50 paid subscribers in this process. So we start to ramp things up from our soft launch. So, our trade's a little bit slow right now while I'm having to do all this other stuff. But, the goal is that we just lock in on all this information. You learn how to read the market, make good decisions that'll last you a lifetime. And hopefully we'll all get through our exponential growth curves together and become very wealthy and enjoy the process of, having the comfort of brotherhood and sisterhood and getting through this process together. So that's just a little bit more about us at Archangel Alts. Thank you so much for listening and watching, and until next time, Archangel Alts out.